Hello, this is Matt on the Moon Lambo channel. Over the years that I've been running this channel, I've from time to time cited that you need to watch what people are doing when it comes to investing, not just what they're saying. Because JP Morgan and Goldman Sachs were both a bit against Bitcoin before they found a way to make money off of it. So think about it. From their perspective, if you're investing in something that is not something they're offering, that's not benefiting them, right? And so they're saying things that to me just don't ring true. And I've cited from time to time examples, and in this video, I want to give you a real world example, which is crystal clear. And if I'm going to show you the timeline, you just look at what they said, when they said it, and then what their actions have been, and what are they saying now that the market's pressed, especially in terms of crypto. And it's just a fascinating short little case study. But this is, you've got to watch out for this, because people, they see these headlines, and if you're just the average person, I mean, gosh, it's covered sometimes by mainstream media. It could be in Forbes, or pick your mainstream media news outlet. You can find this stuff anywhere. And it's coming from a reputable source, and oh my gosh, it sounds scary. And what might that do? Well, the uninformed person might feel emotions, and then make a financial move based on those emotions. And that's why it's bad. That's why I tell you, I'm never going to tell you to buy or sell or hold anything. I'm just going to encourage you to make your own informed, logical decision and remove emotion from that equation here. I'm also going to share with you, towards the start of the videos, opinions and comments from a few chart analysts. But before we go further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos as a fun hobby. Now, as I record this, the market's looking a little bit red, and am I scared? Absolutely not. XRP is at 58 cents. Bitcoin is at $31,373. Market cap for the asset class, $1.27 trillion, and Bitcoin dominance is at, what, 46.2%. I'd say, well, look, mind you, I've been through every pullback that has ever happened since November of 2017, which is when I entered crypto, and I have not exited to fiat currency ever. I have never sold the fiat currency. I've also never sold a single XRP for any other cryptocurrency. I hold every single XRP I've ever held, and so just seeing these pullbacks, again, I have data, it's in my brain, I have it, and I expect this crap. I know that prices go down, and I know prices go up. And I know that there's 12 years of data that show that we're trending upwards, despite whatever scary emotion you might be feeling here today, we're still trending upwards. Here's a tweet from Credible Crypto. This is from May 29th, 2020. The last 896 days were simply one massive reaccumulation phase before the run to $100,000 plus Bitcoin. And the consolidation structure will soon be broken. Are you prepared? Now, mind you, that was over a year ago. People were bearish. And here's Credible Crypto talking about Bitcoin eventually hitting $100,000. And what did happen, though? We did end up trending upwards substantially, and Bitcoin went in one of the biggest tear it's ever had, up to about $65,000 this year. Did you forget that? That happened this year, very recently. It's within the last few months, right? And so Credible Crypto retweeted that and wrote the following. Good times. We went up 6x after the breakout that followed this chart. You're now getting a chance to buy again at a discount before the next parabolic rally. Take advantage of it or don't. I will be Bitcoin. And so this is probably another tweet where you can expect him to retweet it in about a year and just be like, yeah, see, there. That's what I would anticipate. Because, like, I don't know if Bitcoin is going to hit the levels that he's talking about. He's very optimistic for it hitting over $100,000 before the cycle's over. I'd love to see it. I'm a Bitcoin holder. But then there are people like the blockchain backer, and he is more on the conservative side, which is just fine in my books. But he thinks maybe it'll be like 85,000 is the highest number I heard him say recently. So he's not 100% ruling out higher action, but he really firmly does not believe that's going to happen. But regardless, whichever of them ends up being right, and one of them I suspect will be, and or at least closer to the range of where this ultimately goes, that's fine. They're both operating in good faith. I think that they're both logical, rational humans. And when you're talking about chart analysis, it's not like you're a wizard if you're a chart analyst. You're talking about probability of outcomes. I'll be thrilled as long as it goes back up, and I believe that it will. I mean, if you're selling now, you better believe it's going to zero, or else I don't understand. If you actually don't think crypto will be worth more in the future than it is today, okay, fine. But if you don't believe that, damn. All right, and so then there was this tweet from DIY Investing. He shared, I like the name here. He shared this tweet from somebody named Lil Moon Lambo. So there, I mean, come on, a fellow Moon Lambo. Like, what am I gonna do? I got to cover this. And so Lil Moon Lambo wrote, "Are we allowed to talk about the declining volume on this Bitcoin downtrend over the past few months, or will that trigger crypto Twitter?" And DIY, and it might actually, probably would. DIY Investing retweeted that and wrote, "Declining volume plus declining price equals bullish volume profile. Not surprised crypto Twitter doesn't understand how to read volume, though." And so consider this. So you might be thinking, okay, so how the heck is that bullish? If you're talking about declining volume, and obviously the price has been declining, you're aware of that's been happening for a couple months or so now. When you're talking about the volume, like who is causing the price to go down? It's the sellers, right? The bears. They're the ones that have panic sold and just decimated themselves by doing so, frankly. That's what I think. But they have panic sold. And so once those bears, the people that feel bearish about the market in general, once they've all sold, who remains? Now, they're all gone, mind you. They've exited the market, right? Who remains? The people that are not bearish. And so this is why frequently you will see the volume does decrease. It's not some sort of horrendous sign that this is all going to zero. You're getting rid of the people that don't know what the hell they're doing and emotionally sold. Like that's what's happening. And so it doesn't mean that it can't break down after that, but it's very common for there to be bounces off of this. And especially if you look at all the other factors that I've been talking about on this channel, that other chart, I'm not a chart analyst, but people that run YouTube channels that like are chart analysts, just listening to them, if you want the full breakdown, listen to the blockchain backer. He's articulated it very clearly for a very long time. Exactly the reason that the setup that we're in right now looks bullish, actually. Pullbacks happen in crypto. And so, yeah, declining volume, not exactly the end of the world. Here's a tweet from Michael Vandepop. "Bitcoin didn't hold the $32,400 level as support and dipped lower, through which it's facing the final support zone to hold, which is, he says, $31,000 to $31,500, which is right where we are right now as I'm recording this." He then wrote, "If this is lost, $29,000 and $24,000 are the next zones." And so look, it's not impossible for Bitcoin price, because we're talking about Bitcoin there, it's not impossible for Bitcoin price to break down to that level. Again, we're talking about probability of outcomes. And that's why I'd say, even if that happens, let's say a few days or a week from now, however long it takes, let's say that we're staring at $24,000 Bitcoin. Let's say that actually happens. I would still go back to this point in time and say, based on the data available, and we're talking about probability here, the most probable outcome still was that it would go higher, even though it didn't do that. So just because something is probable and you're accurately analyzing it doesn't mean that will happen 100% of the time. Of course it won't. There's no way it would. But with what information is available now, that is what seems more likely at this point in time. Here's a tweet from chart analyst Kaleo. "July 15th, 2020, just a year ago, was the bottom at the end of the summer range. Can we make it happen one more time this year, please?" And here's the chart that he shared. Then after that, you can see a little bit of consolidation and then just up. And this is Bitcoin that's on your screen, the Bitcoin chart. And I took note of this for, well, a few reasons. It's interesting just by itself. But in the Blockchain Backer's most recent video, he was noting, hey, Bitcoin hit that 702 level that he's always talking about, retracement downward. So that, and then you look at what happened last year, are we going to see something similar for this calendar year? Well, I don't know for sure if it means that this is finally the point where we're going to start seeing a break in the upside. That would be interesting, though. But either way, it's a coming. It's going to be a coming. Here's chart analyst El Capo of Noia. Yeah, he keeps changing what it is. It used to be just El Capo of crypto, and then he changed it to a different crypto. He changed it from crypto to crypto. Anyway, but here's what I wrote. Ethereum, in my opinion, cycle top will be $10,000, which, when you're staring at the price now, which is at 1,864, that sounds impossible. That's over five-fold from here. Well, what's actually happening in the background? You guys need to be aware of this. Like, what's the smart money doing? What are the long-term holders doing? How are they behaving, the whales? Well, here's the headline from the Daily Hodl. And I know this is Ethereum, but this is like the behavior is the reason I'm highlighting this. Like this is true of XRP, it's true of Bitcoin, it's just true of crypto in general. Here's the headline. Whales are quietly pouncing on Ethereum as crypto market meanders, according to analytics firm Sentiment. Please guys, be aware of this behavior because this is your if you're selling, this is your competition out there. The largest Ethereum whales in existence are accumulating ETH as the asset's price continues to tick downwards. Well, that sounds scary. Why buy when the price goes down? They're gonna lose a bunch of money. Calm down, Mr. Mouth Breather. They know what they're doing here. They know that people like you, who breathe heavily through the mouth, are going to behave in such an unsophisticated manner. You're going to sell your fear into their loving whale arms. Do whales don't have arms? But I don't care. I can say that. It's my channel. I do what I want, damn it. You're selling into their loving whale arms, right? They will purchase your fear. You no longer have your fear, but then they have your crypto. They do have your at a discounted price. That's definitely what they're getting. I mean, I think I'm going down in price, though. Oh my God, Mr. Mouth Breather, you are not getting. You are not picking up what I'm putting down. You are not picking. And so, but this is what's happening here. And so it's interesting to highlight this stuff as it occurs. And so crypto analytics firm Sentiment says Ethereum's top 10 largest addresses went from owning as low as 18.46% of the total Ethereum supply after mid-May, when ETH achieved its all-time high, to 20.58% by July 13th. Now, the analytics firm says that the accumulation of stakeholders is a good sign for Ethereum's potential price recovery. Exactly. So that even if the price looks like it's going down, people dollar cost average in. These whales, yes, they're smarter than you, Mr. Mouth Breather, but they don't know where the bottom is. They just know that it's at a discount right now. These are cheap prices. You don't want the cheap prices. You're afraid. And so you mouth breathe a whole bunch and just don't comprehend basic concepts, which is fine. You know, you do you. You do you. But check out this quote. This chart is indicative of the largest stakeholders continuing to accumulate while prices have fallen more than 50% from their all-time high levels. It is a vote of confidence that prices can and will recover at some point. So that's why when we're staring here at XRP at 58 cents, do you think it makes rational sense to be afraid that the price has gone down for XRP? By the way, the whole market's down. I mean, if you look on the right side of On Live Coin Watch on the screen, if you care to look, these are all weekly charts. I mean, they look very samey, do they not? This whole market moves in tandem. This is a great time to illustrate that. Throw out USDT, of course, stable coin. And BNB seems to be somewhat doing its own thing. But outside of that, throw USDC also, that's a stable coin, throw that out. But other than that, yeah, the charts look like almost exactly the damn same. Like, it doesn't matter. So that's why I keep saying, you can be fearful and sell, but either this asset class is going to zero or it's going to be worth way more in the future. Which is it? I say worth way more in the future. I believe this asset class will outperform every other asset class over the next decade. There won't even be a close second place. All right, now, take a look at this headline. Let's talk about people that say one thing and do another and mislead you, I think intentionally. That would be my suspicion, at least. Headline from you today. Guggenheim's Scott Minerd on Bitcoin. $30,000 may soon fail. Now look, and I acknowledge this, we don't know for sure. Maybe we do see Bitcoin below $30,000 again. Okay, but let me show you the track record of what has been happening here, what they've been doing, what they've been saying, and the timeline. Check out this article. In a recent tweet, Scott Minerd, Chief Investment Officer at investment firm Guggenheim Partners, has opined that Bitcoin's pivotal support level at around $30,000 may soon fail. Oh my God, I'm glad I sold my Ethereum to that guy over there. Oh, this is so stupid aquatic whale. Mr. Mouth Breather, go away. You're banned for the rest of this Moon Lambo Hot Jam. Just get out of here. Okay, he's gone now. We don't have to deal with him anymore. Frickin' idiot. Anyway, article continues. He believes that it keeps becoming weaker with each new test. And here's the tweet. A technician's rule to remember with Bitcoin. Every time a support level is tested, it becomes weaker. That would mean support for $30,000 may soon fail. Okay, what about all the times where support is tested and then it rockets upward? Sounds like a very scary tweet, though. And now take a look at this. This is a tweet from attorney John Deaton, member of the XRP community. He is the one that is seeking to intervene in the SEC versus Ripple case. So not talking about the legal stuff in this video, but he put out this tweet on July 10th, which caught my attention. And he was referencing Scott Minerd because he's been saying a bunch of nonsense for quite a while about Bitcoin. And I think it's an attempt to benefit himself. And so John Deaton wrote the following, and it linked to an article. This article features Scott Minerd saying, "Don't buy Bitcoin because it could crash to $10,000. Within the last year, he announced Bitcoin could hit $400,000. Why would anyone ever listen to this guy?" Well, I'm not listening to him. It's fear. He's putting just fear out there and scaring people, and crypto media and mainstream media has picked this up. It doesn't mean that he is for sure wrong about Bitcoin going below the $30,000 level, but he's been putting all sorts of fear out there ever since it became clear that they want cheaper crypto. Here, let me show you some of these specifics. This is from finbold.com. There is no need to invest in Bitcoin now, Guggenheim Investments chair says. And this is the article that John Deaton was talking about. Scott Minerd, the chairman of Guggenheim Investments, has said there is no need for investors to put their money into Bitcoin at the moment. Speaking to CNBC, he stated that Bitcoin's price might crash further to as low as $10,000. Oh my gosh. According to Minerd, the current Bitcoin price movement points to a crash based on historical price movement. Therefore, he projects the price to plunge 70 to 80%. And then here's a quote from him. Put it this way. I wouldn't be in a hurry to buy Bitcoin, and I don't see any reason to own it right now. If you're going to be a speculator, speculate that it's heading lower, said Minerd. You gotta wonder, is that what he's doing here? Well, let's take a little bit closer look at the time, because that was this particular article here. Is there a date on? I mean, it was a newer one. There isn't on this website for some reason. I'm kind of surprised. Am I blind? Maybe I'm missing it. I don't know. I mean, my eyes work pretty well. Okay, maybe I'm missing it. Whatever. But it's a newer one. There's a reason it was circulating there. But let's take a little trip to the not too distant past. November 30th, 2020. Here's a headline from the Daily Hodl. Guggenheim Fund prepares to invest as much as $500 million in Bitcoin. Well, how about that? Wasn't Bitcoin a lot cheaper back then, November 30th of 2020? I remember covering this article because we were talking about all the institutional money that's coming in and how it was leading the Bitcoin rally and the crypto rally in general. And so there you go, November 30th, 2020. $500 million from Guggenheim. Well, that's something. And what about this? This wasn't that much later. This is from Bloomberg.com. And this was December 16th, just a couple weeks later. Here's the headline. Guggenheim's Scott Minerd says Bitcoin should be worth $400,000. As Bitcoin surges to record highs, Scott Minerd of Guggenheim Investments believes the world's largest cryptocurrency's fair value still has a ways to go. Bitcoin scarcity combined with rampant money printing by the Federal Reserve mean the digital token should eventually climb to about $400,000. Minerd, the firm's chief investment officer, said in an interview. His comments came on the same day Bitcoin breached $20,000 for the first time, bringing its 2020 gain to 190%. And here's a quote. Our fundamental work shows that Bitcoin should be worth about $400,000, Minerd told Bloomberg Television on Wednesday. It's based on the scarcity and relative valuation, such as things like gold as a percentage of GDP. So you know Bitcoin actually has a lot of the attributes of gold and at the same time has an unusual value in terms of transactions. Well, that sounds pretty bullish. So it's actually worth 400 grand. Well, what has happened since then? Because again, just within the last week, this article was put out where he was talking about Bitcoin. Be careful; it's going to crash down to $10,000. Maybe that might happen. Well, what else is going on here? What is the firm actually doing, though? What is Guggenheim doing? Well, here's an article from the Daily Hodl, June 3rd, 2021. New fund from asset management giant Guggenheim Investments may offer exposure to Bitcoin and crypto assets. What is that? Well, that was just a month and a half ago. So hold on. So now that they're... Of course, Now look at how their behavior. When Bitcoin is cheaper, oh my gosh, it's going to be worth infinity. Basically, it's going to be worth infinity. That's it. And then the price went up, and now it's just they want to buy more cheaper. And look, they're talking about this new fund here, and now they want you to sell your Bitcoin and crypto for cheap. Like, look at the timeline of this. Come on, nobody is this topsy-turvy. You think Bitcoin's worth $400,000, but then months later you're like, oh no, it's going to 10 grand. Oh no. So take a look at this. Global financial management firm Guggenheim Investments is considering whether to offer exposure to Bitcoin and cryptocurrency through a new fund registered with the U.S. Securities and Exchange Commission. This week, Guggenheim Investments registered the Guggenheim Active Allocation Fund with the SEC, which will be listed on the New York Stock Exchange under the ticker GUG. So how about that? So it's a bad idea to get into this, but they're sure as hell going to offer it to their clients. Is that what they're actually doing? Do they actually think it's bad? Or do they want you to think it's bad? You let me know in the comment section below, but I think you get the point here. I'll go ahead and wrap up. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.